I would argue at 45, let's say the dollar index is around its 100 level, because it's usually there rounds. At 45, at 100 level, you're dividing by the Dixie at 45, you're talking $4,500 gold. $4,500 gold. Bear in mind the dollar is being weak right now. If the dollar index is down by 90 or 80 and you are dividing by a weaker number, it will be slightly less. If the dollar reasserts in strength, as the dollar milkshake theory suggests, at some point you get a spike because people can't pay their loans back, etc. You will actually have higher than 4.5 at this level. In other words, if the dollar index is around 120 and you multiply that by 45, you're going to get a significantly higher number. Could be 5,000, 5,500 and further.
The US dollar, USD, trades flat on Tuesday after spending most of the day in red digits with selling pressure at hand. The US dollar index, DXY, respects the boundaries in which it has been trading during the last month, nearly the yearly lows. A minimal bounce is noticeable on the chart, though it is not running away from that lower band. Gold has been on a remarkable journey this year, surpassing expectations and hitting new price milestones. Investors have turned to this traditional safe haven to hedge against inflation, pushing prices to new heights. If the DXY reaches 45, FrancisHunt predicts gold could hit around $4,500 per ounce, potentially rising above $5,000 if the dollar weakens or strengthens significantly. Regarding global central bank decisions, FrancisHunt reveals that central banks are on the brink of major rate decisions. He hints that the Federal Reserve might choose a 25 basis point cut, though speculation runs high for a bold 50 basis point reduction. Financial markets are now expecting multiple rate hikes, with the central bank's focus report suggesting a total increase of 1 percentage point, implemented through 0.25-point increments at each of the next 4 meetings, extending into January 2025. Brazil's largest private bank, Itaú, projects an even more aggressive approach, forecasting the Selic rate to reach 12% by January. This level would likely dampen economic growth, paving the way for potential rate cuts in the second half of next year. In an intriguing decision this week, Francis highlights Brazil's potential rate hike, and China's expected to hold, while the UK will likely stay steady despite the Fed's potential cuts. He stresses that these moves will influence global markets and currency carry trades. Gold price has had a somewhat perfect alignment of fundamentals in 2024. Despite brief interruptions, the metal could yet keep rising, hitting multiple all-time highs and gaining 24.6% year-to-date. The setup has been near perfect for the yellow metal geopolitical tensions in the Middle East, the Russia-Ukraine war, and uncertainty surrounding US and China economies. In a striking revelation, FrancisHunt underscores gold's impressive surge, marking a substantial rise since surpassing $2,000. He reveals a stunning 7-month uptrend, with a $550 per ounce increase since March, despite economic data and labor market reports challenges. Now we present the clips of FrancisHunt's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Central banks all over the place will be reporting their new decisions on interest rates, and the biggest and most important of them all is the Federal Reserve. Will they do a double pointer? How are they, as usual, too far behind the curve and doing a little bit of chase up? Or will they do just a 0.25 or 25 basis points cut? We will see on Wednesday. In fact, it's central bank week. Let's take a look at the map. So over here is a very kindly put together map, courtesy of Bloomberg and shared by one of my Twitter audience, whose name I didn't secure, but thank you to him. These are all the nation states that will be reporting interest rate decisions, whose central banks will be making interest rate decisions over the course of this week. Wednesday in yellow, Thursday pink, and Friday in blue. The main one on the yellow side, in fact there's a couple of biggies, is of course the US of A. There's Brazil, which is actually expected to increase rates, which is a rarity at this moment. And then on Thursday, of course, China is huge as well. China is expected to maintain rates. Brazil is expected to potentially increase rates. And the Fed is talking about cuts. Now, you know what that does. You know what that does to people that might have invested in America and borrowed somewhere else, such as Japan. We'll come on to them in a second. And the cost of carry, if one is reducing its return and yield whilst others are increasing theirs. Well, let's talk about Thursday. Thursday we'll have Iceland, Norway, the UK expected to hold rates. Now remember, we've given on this channel a GBP USD. So after getting beaten up in the pension crisis for not increasing rates as fast as America, the UK is in a situation where they're likely to be holding interest rates while America cuts. That whole story of being so strong and so dominant and pushing up so high, higher and longer, they've brought the higher and longer, and now they have a wrecked consumer. Turkey, Ukraine as well, Norway will be reporting. Angola is not going to be captivating too many people's interest. South Africa is the only other that may do a cut. Most of the others are expected to hold of the major nations. We didn't go into Indonesia. Then we get to Friday, and that's another big one. You know the problems it caused last time. They are expected to hold rates, Bank of Japan. So that's a quick synopsis on what the expectations are. Remember, any of those statements can turn out wrong. There are always scope for shocks. I don't know the discussions. This is just consensus opinion, and I'm just sharing it as it's given to me. I don't have a view one way or another. It's information for you to consider. Up for Brazil, down for the United States of America. Big central bank week. Gold is the boy of the moment. It is indeed. And there you go. Lots of draws for you on there, but at the moment, that's where you are on the weekly time frame. Just a little bit of a reminder on the monthly time frame. Boy, oh boy, what a great period. Don't forget, we said when you break the 2K after the third hit, you'll get a wind up, and then you will get motoring. 1, 2, 3, 4, 5, 6, 7 months, no red months, 7 months in a row, and you started at just over the 2K. Let's see where it started. We'll get you the low there, 2039, now 2582. That is $550 on every ounce of gold that you held. $550 in every ounce of gold that you held since March of this year. And it was roughly the end of that first quarter with the liar data that they stopped being able to hold the lie together. And from April, May, June into July, the data started to look a bit more murky. The unbelievable labor markets, they were battling to hold on to that lie. They've done all the revisions. We've spoken about it enough times. So lies, damn lies, and statistics.
In 1971, facing a growing deficit in U.S. gold reserves compared to outstanding U.S. dollars, President Nixon suspended the convertibility of dollars to gold. Consequently, the U.S. dollar entered a bear market from February 19, 1973 to July 19, 1973, declining roughly 15%. Gold rose around 75% over the same period. During the interview, FrancisHunt revealed that the current gold setup is set to surpass historical gains even in terms of dollars. He notes the breakout and pullback occurred over 10 to 12 months and predicts that the current trend could double the DXY, boosting gold prices significantly. He predicts a significant potential rise, suggesting that gold could reach up to $4,500 per ounce if the dollar index trends higher. Any sudden rebound in the U.S. dollar or rising bond yields, driven by unexpected macroeconomic factors, could further curtail gold's rally in the short term. However, over an 18 to 24-month cycle, gold and silver could present a strong investment opportunity. According to Hunt, the technical structures supporting this forecast are solid, suggesting significant future gains based on historical trends and current market conditions. Let's get back to the interview.
Here's what I want to show you. I'm going to revert this back away from log scale back to regular scale. And what you'll actually see is that the current setup is actually bigger and producing a far greater reward than the existing one that is already completed. So we'll say goodbye to the previous one that ran you up from 4 to 22 and subsequently saw you come quite some way back down to 10 to highlight the current setup structure that you are now in. The current setup structure that you are now in. Let's wipe our face there a little bit, tidy up. And this is where you are. Fine, beautiful people. What chart are you looking at? Reminder, again, 2 monthly chart that is showing you gold divided by the Dixie. If you want to thank us for building any form of wealth and saving and protecting your money from the draconian system, the only way you help us is you utilize the links below by buying gold. We want the best for you. We've always told you our best opinion. We have not become believers or cultists. There will be a time to sell, and just as you should have sold at 22, so you should sell at 46. Although there will be likely some overperformance, and it could be extreme and very volatile, taking off at least 50% and putting into other assets that have become underappreciated may well serve very well, though there is always a point to sell. Where was this at the just-in-time breakout? It was at 20.27, below the previous target, which was 22.4, and the absolute high, which was around 25. In fact, you've only just beginning, and that makes this a doubly historic moment, you're only just beginning crossing over that legacy high again. You're only just beginning, just crossing that legacy high. What was that high? Let's have it again. 25,785, and you're just not there yet. 25.656. By the way, since triggering, you had a break and feign pullback inside 1, 2, 3, 4. Those 4 candles represent 8 months. If you include the one that triggered there, you actually have 10 and 12 months, a year with only one set of 2 months mildly red. You are heading for your first interim. This break, by the way, was at 20,000. This is 45. That is 45 on the Dixie, 20 to 45. You're looking at another doubler plus 25%, another doubler plus 25%, which is going to be in the Dixie terms, significant, expansive move with the potential for blow-off. So this is a gold setup. This is a gold setup as based in all the currencies that make up the basket of the dollar index at present. And even engaging at these levels at 25, you probably have another 2x to go at minimum in terms of the Dixie index just getting up there, which is a huge move, a huge move. I would argue at 45, let's say the dollar index is around its 100 level, because it's usually there rounds. At 45, at 100 level, you're dividing by the Dixie at 45, you're talking $4,500 gold. $4,500 gold. Bear in mind the dollar is being weak right now. If the dollar index is down by 90 or 80 and you are dividing by a weaker number, it will be slightly less. If the dollar reasserts in strength, as the dollar milkshake theory suggests, at some point you get a spike because people can't pay their loans back, etc. You will actually have higher than 4.5 at this level. In other words, if the dollar index is around 120 and you multiply that by 45, you're going to get a significantly higher number. Could be 5,000, 5,500 and further. There are real technical setups all the way along for the numbers we mentioned.
Investment professionals, economists, hedge fund managers, and prominent Wall Street strategists make compelling arguments for gold's role in portfolio management. Coin Price Forecast predicts that the precious metal's price will rise to $4,649 per ounce between 2026 and 2030. According to more conservative forecasts, gold may rise to $2,800. Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.